Where should we invest our next $1 million? Clients are asking. Guess what? Clients are asking where should they invest their next $1 million. Surprise? Hi, I'm Amol Heda, helping you design your real estate solution, author of Thriving Through Ownership, and a real estate broker associate with Keller Williams Saratoga. So you got it right. People are asking where should they invest their next $1 million. Guess what, guys? If somebody were to start working here as an engineer in the Silicon Valley in 2015 and say in 2 years they bought their home and they were working for one of the FAANG, which is Facebook, Amazon, Apple, Netflix, Google, one of these companies. If you Google up salary comparisons for FANG companies, you will see they are in the 400Ks. So if somebody started then and got stock options, you would see that their investments in stocks and other investmentable assets would be about $500,000 then. And if they bought a home in 2017, the median home prices were about 1.5. Those are now 2.5 million. So just in their home, they are sitting on $1 million in equity. And they are sitting with the last 2 years, the stock market, the way it went. Of course, we have lost 1 year this year. But if you look at that, their $500,000 in stocks has turned into almost $1 million. And guess what, guys? This is for only those people that have had their jobs and money invested only since 2015. So guess, those that are living in the valley for much longer, where would they be? Well, so now let's get to investing their next $1 million. So with $1 million available to invest, what has happened is people are thinking that the stock market has run up quite wild and we are seeing a wild ride going down now. So where can they park their money as a safe haven? Some might think gold, Bitcoin, but me and my clients generally think real estate, because real estate is one solid asset that gives you income at the same time that it is invested. And with gold, you might need a place to park and you don't get income from it. So, and the biggest thing about the difference in any other investments and real estate is that you only put 25% down to get a full valued asset. So for $1 million in investable assets, you get $4 million of rental investment property. With interest rates going the way they are going, it is still time to lock the current low interest rates. When I bought my property in 2001, I paid 8.25. When I bought my property at the bottom of the market in 2011, I thought 4.25 was a great number. So now investment properties are at a 4.25. So would you rather lock that rate or wait for buying an investment property when the rates go up to like the 6.5% for the investment properties? And that's on the horizon, you will see coming shortly. Now, let's answer the question of what types of properties to buy once we decide that you want to do real estate. So, the most popular class and everything that everybody understands because they live in a home is residential single family, condos or townhouses. And because everybody understands that, they chase that. Or a lot of people had their first home prior to this time and they want to upgrade, and when they upgrade, they leave that home as an investment and they move into their new one, renting out the previous property. So that's why you see a lot of single family homes as rental stock. The thing is, single family rents are much lower as compared to multifamily, which is 3 or 4 apartments in one building. So that's fourplex, triplex, duplex, or even tenplex. But anything above 4 becomes non-residential or commercial. So commercial is another interesting area. So commercial is charged at a higher interest rate and the term of the mortgage is much lower. So it takes much higher capital to get into commercial investments as compared to rental residential investments. 1 to 4 are considered residential rental investments, and so they are very attractive. So I have 2 options for those people that want to keep it low and get started and test the waters by dipping their feet. One is fourplexes in very high growth areas like Google is right here, Apple is here, Netflix is there, Facebook is around. So if you invest in a multi-family property, the rent that you will get is about double what you get for a single family. So if you go and compare rents on Zillow for a single family property, you will see about $4,000 to $5,000 for a single family property in a nicer neighborhood. Whereas if you compare the rents for 4 units, you will get almost double. So if it is 4 to 5, you will get between $8,000 and $12,000 for a multifamily property. So because the rent ratio is very good, it will give you money in your pocket. It builds your equity because you're repaying the loan, and you get depreciation, you get expenses to claim. So even though you are putting cash in your pocket, you are not paying taxes. And that's a big draw with those that have high income and want to invest in real estate, right? Now, the other class of properties that I'm recommending people to go for that want it to keep it low is single family properties on the peripheries, not Austin, not Boise, because I feel this is a proven strong growth area. Anything that you invest that far out, people are just not comfortable going into an area that's not their known area. Familiarity is one thing people love. And so 50 to 75 miles from here, from Bay Area, you get a lot of properties at million or less. And those are very good experiments. The benefit of those is that each property gives you about $3,000, $3,500 in rent. So if you invested $4 million in that case, you will get about $12,000 in rent. The benefit to compare between a fourplex and a single family property is that a fourplex you can buy and sell only as one unit. So your tax timing is going to be a little bit difficult. Whereas in single family, if you need some money at one time, you can liquidate one property, then you can liquidate the second one, and you can liquidate the third one and plan your taxes and income and cash flow much better. There is a lot to consider when you are investing in real estate at this $4 million mark. Now, watch carefully. You cannot just wing a position that you're going to take for about a $4 million. You need to work with an agent that has that deep experience. Like me, for example, about 30 to 40% of my transactions are investment properties. At the same time, I do help them go to a financial planner, to a tax consultant, in order to be able to structure the most tax-free income that you can create. So similarly, you should work with a team of trusted professionals. If you have questions and need references, please put your comments in below this video and I'll respond as soon as I can. Work with your trusted professionals, put a team of them together, and have your questions ready, your timeline and planning ready. You will be able to do the best. On to my next video. Talk to you soon. Please comment, like, and share. If you hit the subscribe button, you will get a notification when I post more videos. Talk to you in my next one. Bye.